Hey everybody, hey traders, hey TradingView community. This is Chris Pulver. I will be sharing this video out on my YouTube channel, on TradingView's community, as well as Twitter and several other platforms. So let's dive in. This is going to be an important week of trading. We just had a pretty crazy last couple of weeks. The S&P is down just shy of 5%, but starting the week of July 15th, all the way down to last week's end on the 26th. The S&P has shed around 5% from top to bottom. The NASDAQ really showed why it has higher volatility and has higher implied volatility because we have shed in the last 1, 2, 3 weeks from top to bottom around 9.5%. So we'll say roughly 5% on the S&P, 10% on the NASDAQ. We're coming into this week's trading. Quiet first day. It is just after closing bell on Monday the 29th. But the reason I'm sharing this video out with my community and any followers out there is simply because we have a lot to digest. If I take a look right here, I posted this in my Discord channel. Some of the notables this week, I pulled this from StockTwits. We have 914 companies reporting earnings this week. The ones that I'm in specifically for earnings plays, I'm looking at a trade in Microsoft, Advanced Micro Devices, MasterCard, Qualcomm, Meta, I could not get filled on the price I wanted from MicroStrategy. I will take another look at that one. That essentially is it's a tech play that fundamentally doesn't look that great, but on a balance sheet that has a lot of Bitcoin, and I believe MicroStrategy and Michael Saylor have uh, $5 or $6 billion worth of Bitcoin on their balance sheet. So at any time, if they needed it, they have it. But anyway, I like the stock as far as getting some Bitcoin related exposure. But I'm not in MicroStrategy for an earnings play. I'm not in Coinbase for an earnings play, but I'm also looking at Amazon and Apple for an earnings play this week. And then the other two that I might put in tomorrow during my trading rooms or my sessions would be one of two. I might take an XOM and or a CVX for some energy plays. We've had oil dropping a decent amount over these last few weeks. We'll see if there's some stability in oil around the low to mid 70s. If I go back into the charts right here, I posted this video previously. You can find this on my channel, on YouTube, on Twitter, all my handles and stuff like that. It's pretty easy to find me. If you're on Twitter, it's at real Chris Pulver. If you're my YouTube channel, it is youtube.com/Chris Pulver. Anyway, I was looking at the E-mini futures feed, and I just kept a really simple outlook. Okay, if we have a 1, 2, 3, 4, 5. If we have a 5-wave move and this market is about to embark on another correction, well, we just had a little dip for 5%. Either this week is going up to a dead cat bounce, or we're going to use this trend line support to then break down and go one leg lower to retest resistance, retest this window, to retest really this kind of wave, the peak of wave 3 or the bottom of wave 4. This would really be my buy zone. Ideally, I would love to see something between 5,200 and 5,000 as a chance to get long on the S&P and return to all-time highs. Now, I don't know if that's going to play out just this week, but I could see earnings with some of the Mag 7s. If earnings come in solid, I could see the market lifting higher. I would be a little bit more surprised to see it just this week bounce all the way back and take out all-time highs. I don't think the earnings will be that great. However, anything's possible, and we will see what the market does. But it's right at the trend line. This is a really solid chart here with the E-mini futures on the S&P. And are we going to see the trend line act as support and break all-time highs? Or like I said, if we have a fifth wave completion and a 1, 2, 3 correction, I'm looking for a 1, 2, 3 wave move. All right. If we happen to be a little bit, a variation of that, maybe it's here and then we break lower, then we pull back and then we fall again. Either way, this level is going to be my buy zone on the S&P for the medium term. Okay. But in the short term, I'm trading this, up for the week. If we get back to highs again, fantastic. I'm just going to try to stay out of the way. I'm taking individual trades on these earnings plays. Some of them are omnidirectional, where if price goes up or down, it's enough to give me some profit on the trades. Others, like the Qs and Apple and Amazon, I'm looking just to take a stab and see if earnings are solid and the stock price goes up this week to make a few bucks. So it's pretty straightforward. You can see all the writing here. I've got some hedges on the ES. I've got some hedges on the NQ. I've got a bear trap that's kicking in right now. I've got some out of the money kind of black swan hedges down to some big levels here that pay about 20 to 1 or so. And that's just if I need it. When it comes to other instruments, what else we have going on this week? The Bank of Japan is due to have a rate decision, if I'm not mistaken. I can confirm that right here. So on Tuesday the 30th and Wednesday the 31st, Bank of Japan has a policy rate, monetary policy statement, as well as economic outlook. The Fed on Wednesday to wrap up the month. This will be an interesting combination between the BOJ and the FOMC or the Fed. Wednesday the 31st, we do have a Fed rate decision expected to pause at 5.5%. Nothing's likely to change. I do wonder, however, if the language is a little bit more explicit or definitive on the Fed actually cutting rates in September. The market is expecting it. This is a very high probability that right now, July, nothing is expected there. September, 90% probability that there's going to be our first 25 basis points rate cut. What's interesting is this popped up on the radar the last couple of weeks with possibly a 50 basis points cut. It's unlikely, but it's still there. And then going into September, November, December, November anticipating another cut with around 57% probability, and December a 54% cut, or 54% probability with another 25 basis points cut. So if that is the case, the market is looking at 3 cuts by the end of the year: September, November, December. Now, what makes it a little bit trickier? Well, we've got data coming out this month. We kick off August trading. We're going to look back and see what July's inflation reports are. Does this change September's rate decision for the Fed? Yes, no, maybe. All we have really from now into August is we have earnings, which this is a big week. We have Jackson Hole near the end of the month, and then summer is done. It's back to work. Europe comes back online and back to the grind in September. Traditionally, September is a bearish month, and usually the first part of October is a bearish month. But October can oftentimes be a pivotal bottom in the market if the market's going to rally for Q4. So we want to see what type of seasonality that gives us, and possibly a strong Q4 to take us into the end of the year. I still like some of the instruments that I'm trading. Just taking a look at my poll report. This is my kind of macro top down. S&P, we're steady, but we've obviously had some damage done the last couple of weeks here. Q's down, like I said, 10%. S&P down 5%. The Dow is hanging in there. The DIA or the diamonds hanging in there with 3 positive weeks. Even this one, even though it was wild and crazy, it did carve out a green week, and last week as well carved out a green week. Today started off on a bit of a sideways note. We'll see if this is a swing, a pullback, and another push higher. If earnings are solid, the S&P is up and the Nasdaq is up. Does the Dow continue to outperform and maybe reach all-time highs once again and play some catch up? Maybe get into double digits all-time gains for the year. We'll find out. The Russell, a little bit more volatile, say down over 1%, but again, 1% down for the day near these recent highs on a breakout of around 13%. Take this little run starting from early July. We had the Russell up around 13%. It's pulled back a little bit. Same type of situation. Do we have a low to high, a pullback? Are we dealing with a bit of a bull flag here? If that's the case, I would like to still, be long and stay long Russell. The IWM for me, my target is 240 to 245. That would be an all-time high. That's an all-time high area on the IWM, and for me, I'll be looking to take some profit, protect some profit there. Some option trades that I'm doing there. I'm long calls. I've got some calendar spreads. I also have some out-of-the-money debit spreads trying to pay me, hopefully some solid reward to risk. So those are your major indexes. We go to volatility. I did take a hedge trade last week. Let me switch this back over to volatility here. So the VIX. I had a 10.50 call and I had a $20 call. Both of those paid out really nicely. I'm now looking to see, does volatility stay in the, let's say, 15 to 20 level, or do we dip back down to the low teens? If we came back down to, $11 or $12, I will probably take another 30 to 60 day VIX trade, trading options, trying to get paid on some volatility with some type of event. I could be wrong. I could be wasting money, but it certainly helps to have a little bit of a hedge when needed. The dollar index to me is still very choppy. I'm looking for the dollar index to either 1, break below 103.90 and be a clear path for bears, or 2, break back above 106 and hopefully be a clear path for bulls. I don't have a direction. I'm watching closely. If the Fed starts cutting rates and we see that as, the market could price it in ahead of time and possibly get back down below 103.90. Or if somehow the market's disappointing and the Fed gets stronger and it's one of the better currency pairs compared to others, I'm just looking for clean directional confirmation on the dollar crosses. And with dollar confirmation on the DXY, I'll then look to participate in the Forex pairs involving dollar crosses. For right now, though, I'm staying out of the dollar and just waiting to see some better confirmation and better direction. Oil. We're trading at 75.90. I did call out originally some support around the $77 zone. We're hanging out right there. It's certainly a little bit vulnerable. My stop losses on my crude oil futures are down here at 72.50. So as long as we can kind of stop the bleeding, I might be okay out to the middle of August. But basically, I'm still looking to see if oil is going to be, choppy a little bit or figure out some type of range trade. If it comes back down here, I'll get in bigger with oil futures. I'll trade USO and other related instruments. But otherwise, I'm looking to see if this is just a noisy zone. Maybe it's noisy this way, and oil just goes back and forth here for the rest of the summer. We'll find out. But it's been mostly led by a slowdown in China, slowdown in demand, and oil prices have been dropping along with copper and other materials. Aluminum's down as well. Uranium's down. Gold hanging in there, but still probably range bound with support lingering around 2290 to 2280. Silver, a bit more of a violent pullback. I still like silver for an accumulation around this $26 zone, and then looking bigger picture silver to the upside. I would like to see this potentially as a bear trap where we have, a smash of these lows and possibly running some stop losses. This isn't like trading Forex, by the way. So, I mean, it's not really a stop loss hunt, but I just think if this is an accumulation zone, to me, I like the area of, buying small, really good structural levels here, look for some bullishness, and then see if this is ready to pop back up here. Longer term, way more aggressive to the upside on SLV or on my SI or my silver futures positions, looking to go more bullish on the upside. Bitcoin, we had a nice little bear trap down here that we did a pretty good job calling. 60K to 56K was my window to buy. That worked out pretty nicely. Added some exposure on some of my Bitcoin ETFs, added some exposure on spot prices and futures for Bitcoin as well. We got some ETFs right here, BITO, IBIT, also Ethereum. Ethereum, same type of thing, came down to equal lows around 2,800, pop back up to the upside. We're seeing a little bit of outperformance of Bitcoin versus Ethereum performance. Bitcoin is up higher off these recent lows compared to Ethereum. Obviously, I want to see what happens here. Ethereum needs to hold these levels around 2850. And then copper, like I said, copper is still just looking pretty rough. I'm not trying to call the bottom. I'm not that interested. I had a run on copper in this breakout in the $4 zone. That was a really nice trade for a couple of months. And after that, I'm glad I didn't start, calling tops and trying to, get in and retest these highs when the market clearly is dropping aggressively on copper. So to me, copper is either one, give me a good level around 370 or 320, looking for a bounce in a buy trade, or I mean, heck, if we come all the way back down into $2 or less, that's a huge reset on copper. But if we do, I know where I'm buying. Extremely low down here at the 250 to $2 zone. The Nikkei, the Japanese index is down over 10% from recent highs. This has gone as much as 11.3%, a little bit of a pop to the upside the last couple of days. But man, what a nasty sell-off. You got to watch the Japanese yen. The Japanese yen getting stronger probably means more signs of trouble for the Japanese index, the Nikkei. Of course, if the Japanese yen gets weaker and the Nikkei picks itself up, I could see this. We have this aggressive sell-off. If we stabilize here and start to head back up, are we able to hit all-time highs in the Nikkei? Yes, no, maybe. If so, this is why I think the Japanese yen is going to be the opposite correlator. So if you have the Nikkei going back up, expect the Japanese yen to get weaker. If you have the Nikkei going down, expect the Japanese yen to get stronger. So, I mean, I'm trading the Japanese yen by proxy. I've got some pairs trades on. Sounds funny, but you get it. So example being, I would be, long the pound yen, short the euro yen. I'll set a stop loss at one for 100 and some pips, maybe 100 to 125 pips, and I'll set a take profit on the other one for 250 to 300 pips. So my reward to risk, I try to make it greater. There's enough volatility, these yen crosses, that I don't necessarily have to be directionally right. I'm just looking to make some money. Hopefully the volatility will continue on the Japanese yen pairs for better, for worse, and we'll figure out what to do. The DAX is the German index. We're just sideways for right now. The UK FTSE is playing some games with this chop, so I'm not quite convinced on anything here. There's a pretty strong trend line. If we have a pullback on the FTSE around 8,000 or maybe 7,800, maybe looking for opportunities to get long. The Chinese market, the Hang Seng Index, is also down, but I still like this stock in this index overall for a range trade. Look, we might be slowly correcting in here. If this structure breaks, I'm looking for China to resume. The sleeping dragon awakes, and let's see if we get to the upside around 22,000. If we offer up another test of the lows around 15,000, I like that position for more to the upside. So I'm keeping an eye on this. I don't have crazy exposure in China, but probably about 3 to 5% of my portfolio, simply because that 3 to 5% has 100% to 200% upside, and that certainly helps move the needle and generate some alpha. So I do like China. My exposure is probably within 4 to 5 symbols, so it's not crazy, but it does. I like it. I like being diversified and not just parked into U.S. and U.S. tech. Then we have our Mag 7, Apple, Amazon, Google, Meta, Microsoft, Netflix, Nvidia, Tesla. Got some mortgage rates down here. This is a 30-year versus the 1-year variable, as well as the 15-year. Not that that matters, but to wrap up today's video, most important takeaways is we have a busy, busy week. All right. So Wednesday, FOMC, we've got BOJ with monetary policy expecting to do the same thing. There's no forecast right here, but the BOJ is likely to keep rates the same. Wednesday is FOMC expected to pause. Does something wild and crazy happen in the Japanese yen this week? I don't know. The last couple weeks have been pretty wild and crazy. So, like I said, I'm willing to take some trades, trade small, trade what you see, pairs trade it where one is a winner, one is a loser, make some money. But you don't have to be directionally right necessarily. Just have one side be right. And then we kick off the new week or the new month. So Thursday the 1st, we have Bank of England expecting to cut rates for the first time by 25 basis points. We also have unemployment claims in the U.S. We have some PMI numbers out of the U.S. And then we have CPI for the Swiss franc. I think we have CPI this week out of Australia. We do. So Tuesday evening, Eastern time, 9:30 p.m. Australia time, or 9:30 would be Australia's morning. Quarterly and yearly CPI out of Australia. And then we have non-farm payroll. So a little bit of everything. We got lots of earnings. We've got the Fed. We've got some rate decisions. We have some currency volatility. We have some big moves and expected market cap movements in stocks. We have seen, I posted this in a couple of my channels, something around $700 billion of market cap wiped away in the last couple of weeks. So either one, the market's looking to make that up and quickly regain what was lost, buy some things at discounts, or two, we might see if there's more pain ahead. So that's what I'm here to find out. That's what I'm here to trade. But as always, position, keep it mechanical. No trade defines you, and just continue to grind as usual. All right. Happy trading, lots of profits. If you need me, you know how to find me. Chris Pulver. I'm on YouTube. I'm on Twitter. I'm on Instagram. I'm on LinkedIn. Anyway, you can find me out there. It's easy too. But hopefully, this is reaching lots and lots of traders. Hopefully, it's helpful. And anything you need from me, let me know. Happy trading, lots of profits. Talk to you soon. Thanks. Bye.